Increased regulations have had a major impact on the operations of insurance companies and insurance brokers, and there's no indication that this is going to end in the very near future. Although some insurance companies and insurance brokers, to a certain extent, have geared themselves to the ever-changing insurance environment and relooked at the business models, they are now facing the threat of a new weak demand for insurance. On a global front, we're seeing that insurers have experienced an ongoing increase in regulations, as well as a renewed increase on growth and profitability, capital returns to shareholders and cost reductions. In South Africa, it's no different, and we are seeing of late a similar trend, with most of our insurance companies taking stock of their current business models and their strategy going forward. The Financial Services Board, FSB, introduced a number of key regulatory requirements, and one of this is binary regulations aimed at regulating insurers, outsourcing of underwriting and claims. The main objective here being to manage the conflicts of interest where brokers were performing outsourced functions on behalf of the insurer. The introduction of binary regulations was hot in the heels of the not so long ago regulatory exams introduced to both brokers and insurance companies. And the impact on insurers and brokers will be further influenced by the introduction of SAM, Solvency Margin and Management Pillar 2. FSB has identified 2015 as the implementation date, and recent surveys undertaken within the insurance market indicated there is still a lot more work that needs to be done to ensure readiness. And of course there is Stride as well. Stride was designed and developed by the short-term insurance industry to ensure the sustainability of the industry as a whole, as well as that of the individual participating companies. As a preferred way of communication, or communicating data across the industry, Stride will enable compliance while delivering process efficiencies and cost savings. Stride is aimed to create a sustainable and trusted insurance industry that facilitates informed risk-taking to all stakeholders in the value chains by defining the rules of engagement for data and process interchange and electronic connectivity capability that is based on a South African Accord standard, measuring standards and global best practices, ultimately which will benefit the consumer. However, this once again places a burden on insurance companies and insurance brokers as far as already declining operational cash flow is concerned. Insurers are further impacted with the introduction of TCF, treating customers fairly, which follows on the recent introduction of the CPA, the Customer Protection Act, all of which are severely impacting on how insurance and brokers will be conducting their business in the near future. Although TCF will not be applied to all elements of insurance, it does place a further burden on insurance staff to ensure that they provide the correct and proper advice to their customers or clients. My concern, however, is on the FSB and regulation. Whilst we all understand the reason for regulations and the reasons behind it, the question must however be asked, is our industry being over-regulated? And the question here is that how negatively will this impact on future job creation? And will it be only up to the banking sector to ensure that jobs are being created within the financial services sector? Skills and knowledge is on the decline within our industry, and the ever-increasing introduction of regulatory rules will have a further negative impact on creating new entrepreneurial opportunities for new independent brokers to be established.